What is up, YouTube? The elections were yesterday, and I had planned to go over how the election results were going to impact the market, but we have some news coming out of the crypto space. That's right, we are going to talk today about what is going on with FTX. Stay tuned. So FTX, world's second largest crypto exchange. What's going on with it? Its price tanked today. Well, they had reached a strategic partnership with the world's largest crypto exchange, Binance, that involved Binance holding on to $2 billion worth of the token that they had minted to fund their operations, called FTT. And I guess Binance was not too happy at them earlier this week and tweeted out that they were going to liquidate all $2 billion worth. And this created a sell-off. Obviously, right? If a whale is going to sell all of their crypto, you don't want to be left holding the bag when that whale sells it off, because there's going to be a ton of supply on the market and low demand, right? Supply and demand. But another whale in FTX's waters, Alameda, which is a hedge fund manager, was holding on to $5 billion worth of FTT. This is about half of their reported assets on their balance sheet. Half of their reported assets were in this crypto token. So it came to light over the next few days, leading into today, that financially speaking, neither FTX nor Alameda could really stand up to this $2 billion liquidation. And now, Bloomberg is valuing the exchange at $1. I don't know what's going on with Alameda, but it's nothing good. Those who are having their money managed by Alameda, those who are shareholders in Alameda, good luck. The company blew it. Alameda blew it. FTX blew it. Now, this is going to happen in any immature market, and rest assured, crypto is still a very immature market. It's a very, very immature market. We're not sure yet what's going on with it. We're not sure yet what it's going to do. Who's going to come out ahead, who's going to come out behind. And there are any number of extremely good salespeople in crypto, in Web3, who are looking to sell snake oil, or were looking to sell snake oil in the previous bull market, and people were gobbling that up. I remember talking to people, and they were like, what crypto asset would you invest in? What would you do? Would you put it in Aave? Would you put it in FTX? Would you put it in Binance? Would you put it in CoinMarketCap? Where are you looking in the crypto market? And I said none of that. I said you invest in the technology itself. Invest in Bitcoin, invest in Ethereum, maybe Solana. That's it. Anything else. And even Bitcoin, Ethereum, Solana, even those are tough. Even those are dangerous. I mean, we can see this today. The price of Ethereum is down, I think, 25% this week. Following the FTX news. And that's tough. That's a really tough pill to swallow. I hold some Ethereum. I still have a really bullish case for it, but it's tough to see. But even in the last bull market, I was not touching any of these really speculative crypto businesses with a 10-foot pole. Not Binance, not Gemini, not FTX, none of it. Because you had a lot of these people running around, the Winklevoss twins, a lot of other people running around making all sorts of bold claims. And they were really, really good salespeople. They dressed up in suits, they walked the walk, they talked the talk, but when push came to shove, they could not deliver. And this is coming to bear, well, it's coming to be found out in this bear market. The winners are winning and the losers are losing in the crypto space. Well, the winners are surviving, I should say. Winter is coming, as Ned Stark says, and we just gotta grit our teeth and plow forward. So, what does this mean for the crypto market? Well, we're going through a bit of a reaction. We are going through a bit of a reaction. I still have a lot of faith in the major coins to bounce back. We've seen them do this before. Crypto winners, crypto dips. The market's super volatile, but with volatility comes opportunity, comes risk. I might look to load up if I had some dry powder sitting around. I might look to load up on Ethereum. I might look to load up on Bitcoin. But it's a risk. And I do think that if there is going to come a moment where this stuff is really tested, I'm gonna say tested, it would be right now. It has never been this big before. It's never been as big a player on the public scene. It's never had to deal with sort of scrutiny. It's never had to deal with all the scandal and the stuff going on right now. And if it's going to fail the test, it will be soon. And I know I'm still bullish on it. I'm willing to rearrange deck chairs on the Titanic for as long as it's above water, but it is a risk, and don't let anyone tell you otherwise. And even some of these more stable assets in the crypto space, Bitcoin, Ethereum, Solana, even those are risky. And I felt and still feel that where I'm at in life, where I'm at with my age, where I'm at with my financial situation, I wanted to take on that risk because you got to risk it for the biscuit, right? You got to take on some risk in order to get the really good payoffs, and I still believe that, and I'm still pretty happy with what I've done. But it's a beating. This bear market is not easy, and it's not easy on those of us who were maybe younger, getting involved in the market, looking for the next IBM, the next Microsoft, the next Apple, the next Tesla. It's not easy, but you gotta stomach it, you gotta bear it, and you gotta handle it. You gotta find a way forward. For me, it's non-existent, right? The money I have in the market doesn't exist. I'm not going to touch it, not going to pull it out of the market. I might restructure it, I might do all this, but I'm not taking it out of the markets. The markets, we got to take it out of me. And we'll see if they do. But this FTX stuff really does feel like a Lehman Brothers moment for crypto. Really just kind of feel like an Enron, Bernie Madoff type moment for crypto. But I mean, you look around, the financial banks are still there. The financial players are still there. They've, JP Morgan, been there for 130 years. It's still there. So while there is fluctuation and volatility in the short term, uh, you gotta keep solid with what you think and your theses about these assets. And you gotta remember that the more time you spend holding on to assets, the more time you spend involved in the markets, the more time you keep your nose to the grindstone, especially in these emerging markets in AI, in tech, in crypto. These markets are going to have ups and downs. They are very, very volatile. They are very, very prone to stuff like this happening because they're immature and the winners haven't been, the wheat hasn't been separated from the chaff yet. And the only way to get there, the only way to separate the wheat from the chaff is time. Is stuff like this happening, and it's gonna be rocky. It's gonna be rocky for a bit. But if you trust the course, if you trust your navigation, if you have faith in your path, you gotta stick with it. You are going your way, and you have to trust that that's gonna pay off. Anyway, that's all from me today. I'll talk to you guys more tomorrow. I think I'm going to be on Palantir Weekly this week. Looking forward to that. We're going to be going over earnings. I have some thoughts. I have some feelings. I have some sentiments. I'm sure that Amit is going to love to hear. So, till next time, remember to like and subscribe, and I'll talk to you tomorrow.